All right, hey everyone, I'm Elizabeth Copeland, junior trader here at Verified Investing. And today I have a very special guest with me, Mr. Mike McGlone, who is a senior commodity strategist at Bloomberg Intelligence. Thanks for being here.
Well, thanks for having me. So how do you go from a junior trader to maybe a higher senior trader?
A lot of learning from people like you who know the business in and out, and obviously from Gareth. So a lot of strategy and learning
Good.
and absorbing. Yeah, it's going to be exciting. A couple months to go, but I've learned a lot.
Good.
Well, your macro research has consistently highlighted the deflationary forces in the economy. With recent inflation data and Fed policy shifts, has anything changed in your long-term deflationary thesis?
No, the key thing that's changed this year, Elizabeth, is I'm completely seriously scared about what's happening in gold. Gold, I don't think is going up for inflationary reasons. It's a cycle where it goes up for deflationary reasons. I mean, it's an offset to the stock market. It's an alternative. And you can see that in, for instance, bond yields. Right now, the 10-year note yield in the U.S. is 4%. At the end of last year, it was about 4.6%. So that's dropping. Even 30-year yields are dropping. So if there's inflation, it shows up in the bond market first. And then there's seriously deflationary forces in China. China has 10-year note yields of 1.84%. And it just brings me back to, I was trading Japanese government bonds in 1995, and I remember selling those deflationary forces there that lasted for 30 years. That's happening in China now. So I'm worried that a normal cycle in history is where you get deflation from inflation. Now, we just had the biggest inflation in your lifetime. Now, I saw bigger inflation in the 70s. I only cared about candy bars back then. But now, that's my point, is I think we're tilting that way. So it's happening in China. Potentially in Europe, they're facing those massive deflation forces coming out of China. And there's one key force, the pillar of everything, is the U.S. stock market. At 2.3 times GDP, and at the highest ever versus the rest of the world, it has to stay elevated, or we have a very serious situation, very serious, like happened. There's only 2 points in times in history, and I love that people push back on me in this. 1929 in the US, that peak, and 1989 in Japan. And those are what happens. You get risk assets go up for good reasons. In this case, it was big pumps and liquidity thing, and then they just revert. And we need to keep that pillar high, or we're going to get normal deflation from the inflation. That's what I'm worried about, might kick in by the end of the year, and I think that's what gold's figuring it out.
That's really interesting. That's a great perspective, especially going back to the cycles. I mean, all the way back to everything in the early 70s. So you've, let me look at commodities broadly. What's the most compelling opportunity you're seeing right now, and what's the biggest risk these traders are underestimating?
The biggest risk, I think, right now is a normal pullback in the assets that rallied the most this year. Precious metals, gold, silver, platinum, and palladium. On average, you put them together in their basket, up about 70%. That has not happened since 1979. And it's mostly, you didn't really trade a lot of platinum and palladium back then. It was really gold and silver. That's a serious sign, and I'm afraid that they might have a little bit of a pullback. You see things like crude oil down 15%, and just to say that crude oil is down 15% and gold's up 60%, that's a global recessionary trajectory. So something happening there, but the biggest thing I'm worried about is what might happen with the stock market. Why? Because you look for little signals. So when you have crude oil down 20% in a year, and a year that the S&P 500 is up 15%, that's kind of odd. And so you look at it, it's a highly correlated, crude oil is very highly correlated to the stock market. So what if the stock market starts ticking down? Those deflationary forces that I've been worried about for a while accelerate. So the key thing I'm worried about for the next 3 months, the end of this year, is we get a little pickup in volatility. I have to start there with stock market volatility, because 90-day volatility on the S&P 500 just bottomed at 8.9%. Right now it's around 10%. And that was the lowest in 5 years. So you have to expect a new lower plateau in volatility for the rest of the year to stay low, stay moderated. Or if we just get a little backup in stock markets, the domino effects kick in. And I'm afraid it's already happening in cryptos. So I'll end with this. It's already happening. Bloomberg Galaxy Crypto Index. I helped launch it at S&P. I'm sorry, I was at S&P. That's why I talk indices. But at Bloomberg, it was up 30% in the year. Now it's up about 5%. So think of traders. Anybody who's been long this year, like, I still got a profit. Maybe I should start hitting a few stops and maybe get out of it, because you don't want to sell it down 30%. Maybe you get up 10% by the end of the year.
Right.
You get lucky.
Right.
But getting lucky with the stock market volatility at a multi-year low is like, good luck.
Yeah, good luck getting lucky, that's for sure.
Yeah.
And for our viewers who want to learn more about you or want to follow your work, where can they find you?
Well, on Market Mavericks, I'm just a big fan of Garrett and your team. So there, definitely, I'm on Bloomberg Terminal, on X, at Mike McGlone 11, and LinkedIn, Mike McGlone Senior Commodity Strategist. But I post a lot of my stuff, and people, if they ask, I can put them on my distribution list. But one thing I really enjoy, partly when we're speaking, is being on Garrett's show, Market Mavericks. Because what I do is 24/7 is strategy and research and just trying to figure out stuff that's new and different that I can, put out to people, and I get to show and tell once in a while. Garrett allows me to do that in the show.
And that's a great time because it seems like you guys just kind of ping off one another. There's no script. You're just going at it, just talking with a crypto fanatic and then a technical trader and yourself.
So that's one thing I really love about this show, and Scott pointed out before, we don't plan at all. It's completely extemporaneous. Garrett drives it.
Right.
And Garrett, and we know what's relevant because we're so in markets, but that's what I want our audience to know. That's just complete extemporaneous. Three market people just enjoying bantering, and it's important we disagree because that's where you really hone your views. Am I right or wrong? And it helps our audience make better decisions, I hope.
I think so, yeah. And again, check out Mike and the whole Maverick team every Thursday at 3 Eastern on our YouTube Verified Investing page. Thanks so much for being here.
Thanks for having me.
Thank you. All right.